Too much to watch, too much to do, not enough time. That's what really crushed the stock of Netflix, down nearly 22% today after last night's fiasco of a forecast by the entertainment kingpin. For years, the CEO of Reed Hastings has told us that his real competition is simply the other potential uses of the time people have between, say, when they get home from work and when they go to sleep at night or weekends. But the narrative changed and changed hard last night. Netflix actually delivered pretty much inline numbers, but its forecast was for far less than a half of the subscriber growth that most research firms were expecting. The reason? Among many, including an odd reference to weakness in Latin America, the main culprit was that there's finally too much competition. See, the spell has been broken. Broken by Roku, broken by Hulu, broken by Peacock, which is owned by our parent network, broken by Paramount Plus and Showtime and HBO Max and Disney Plus. The limiting factor for Netflix is no longer time. It's everybody else in the streaming business. The market immediately jumped to that conclusion that home entertainment is now capped, and if anything, it's been wildly overinflated by the stay-at-home nature of the pandemic. I beg to differ. As you know, unlike almost every other investment manager over there, I play with an open hand. I show you what I'm doing in my charitable trust. Try to teach you how to be a better personal portfolio manager. That's why I started the club, right? And this morning, in our morning meeting internet show at 10:20 a.m. for CNBC Investing Club members only, I said that the decline in Disney off the Netflix news seemed wrong-headed. Disney Plus is the overlap here. And with the stock down 10 to 137, it was at $200 less than a year ago, you're now getting that whole business that people have turned on practically for free. Now, I've been too early on Disney. We rang the register on this one for the Charitable Trust last year. And then when it came all the way back in, I said, I got to start buying it. Unfortunately, because I mentioned this morning on television, I wasn't able to buy it lower than the other stock that I had bought. I can only tell people that's what I want to buy. And by the way, if it is down here next week, we're going to buy a bunch. But it's time to stop conflating speculative stories with investment-grade stories. Many stocks that have been annihilated here belong to companies that don't have much in the way of earnings, companies that mostly trade on hype or hope. You got all the SPAC plays, hundreds of them, of which I'm hard-pressed to find 3 or 4 that might be worth owning. There are all the recent IPOs in the last 18 months, nearly all of which are uninvestable because their valuations were inflated by the private equity venture capital investment banking complex. Crypto, which contains the most egregious excesses, including Dogecoin. I think Dogecoin is a comedy, but as SEC Chairman Gary Gensler told us, it needs a lot more disclosure, a comedy with disclosure. The problem with crypto is that there's no floor, and we know almost nothing too cryptic. With stocks, at least we know how many shares exist. All these speculative assets keep getting put through the meat grinder. That's what's really going on. Now, of course, they got some good ones today. They're out of style, though. But you just can't extrapolate the weakness of one company, which is done very well, Netflix, with a whole host of other companies with great brand names that make fantastic products and generate good earnings, like Disney. Yes, full circle to Disney. I want to own the stocks of long-standing great American companies that are brought down in a guilt by association fiasco, and that's exactly what happened to the stock of Disney today. I am not saying Netflix isn't worth owning. At some point, it sure will be. I am saying that there are plenty of high-quality companies that were poleaxed today because of Netflix. And those were the best ones to buy, not the SPACs, not the recent class of IPOs, and most certainly not crypto, especially Dogecoin. I'd like to say there's always a Mark Summer. I promise to find it just for you right here on Mad Money. I'm Jim Cramer. See you Monday. The news with Shepard Smith starts now.
Shepard Smith here. Thanks for watching CNBC on YouTube.